That's why when I look at the Malaysia equity market, sometimes I prefer to do long than short, is because you never know when the fund manager suddenly will come and push up the price. But then in the end, the fundamental will prevail. So meaning that if it's overall it's still bearish, it will still have to come down. Unless we have a. That's why when I look at the Malaysia equity market. Okay. Let's see. Okay. So, okay, so here, today I'm going to share with you the economic data, because what we are concerning is that whether the US Fed, they will continue to raise the interest rate. Okay, so if I were to share with you, okay. You can see this one, right? This one is a FOMC meeting. And then I also have another chart. This one is the inflation, okay. So can you guys type in the chat? Okay, you type in the chat now. Which one is this? The inflation or the interest rate that caused the stock market to go down? What do you think? Which one is the main driver for the stock market to go down? Is it the inflation rate or is it the interest rate? Okay, type. Because it is important to sometimes to know exactly what triggered the stock market, so that you can analyze better. Okay, so is it the inflation or is it the interest rate? Okay, so I see answers are, you don't have to follow, you can have your own. If let's say your answer is different, you can just type, you can, never mind, we just share. Okay, so it doesn't matter. Anybody else? Okay, so looks like most of you are looking at the inflation caused the stock market to go down, correct? Okay, now let me ask you something. Let's say our inflation rate is continue at this rate. Okay, our inflation continue at this rate, and if let's say the US Fed, okay, Jerome Powell, he did not raise the interest rate. Okay, instead he lowered the interest rate. What do you think will be happening to the stock market if inflation continue to go higher and interest rate he didn't increase? Okay, he just in fact he reduced. He's using expansionary. Okay, let's say he's using expansionary monetary policy, whereby he reduced the interest rate while the inflation keep on going higher. Okay, can you tell me what will happen to the stock market? Okay, yeah, it will go up. So then, is it inflation or is it the interest rate? Short-term market rally, yes, short-term market rally. But however, if let's say they continue to keep the interest rate, deliberately keep it low while they let the stock market to run wild, what will happen? So of course the stock market will move according to the cycle, but the thing is that we will not see something like this will happen. You get what I mean? So meaning that in fact it is not about the inflation, it is how the US Fed react to the inflation. So meaning that the US Fed Chairman Jerome Powell, what is his policy? So if his policy is to raise the interest rate, and then you have to see how aggressive he is raising the interest rate. So if let's say he is very, very aggressively in raising the interest rate from 0.25 in April, okay, I'm going to share with you the FOMC meeting. So this is the FOMC meeting for this year, 2022. This is the link. I share with you this link so that you can check on your own as well. Okay. So this link this website has the dates for the FOMC meeting. So this is 2022. And this year, how many FOMC meetings are there? So 1, 2, 3, 4, 5, 6, 7, 8. There are 8 of them here. So if you notice, we raised the interest rate started March this year, 0.25. And then May is 0.5, and then June is 0.75. Okay, so from March onwards, we are looking at the interest rate increase at such a fast pace. And in fact, beginning of the year, we didn't have any interest rate hike. It was same. And then when you look at 2021, in fact, the Fed reduced the interest rate, especially in 2020. Okay, maybe 2021 they maintain it, but then in 2020 they reduced the interest rate when the government is pumping trillion and trillion of the US dollar into the economy, and then they are using expansionary fiscal policy and the monetary policy to help to solve this pandemic problem. Because when we had a pandemic, naturally everybody will look at the whole economy is suffering. Okay, so in order to help to boost the economy, all the governments are actually trying their best to pump in a lot of money to boost the economy. And for us, we also pump in billions and billions of RM, and at the same time, we also reduce our interest rate. If you can still recall, 2020, we reduced our interest rate. We didn't increase our interest rate until this year. So that was the time when you see the stock market keep on rally, right? You saw a V-shaped recovery, the stock market keep on rally. And at the same time, the global policies are going for expansionary policy. So they lower the interest rate, they pump in a lot of money to boost the economy. And of course, in this case, they ignore the fact that they have actually contributing too much of a liquidity to the stock market. So that was, we are looking at the stock market for the US, it was historical high. It was every few months you see historical high again, every few months historical high again. Okay, so that was the situation. So now it is not about the inflation. Inflation has already started. Okay, inflation has already started in let's say you look at this one is the inflation. Inflation has already started in 2020. End of 2020 already started. Okay, so this one we already see inflation is there. But however, it's just that the Fed, Jerome Powell, right? The US Fed, or rather the global policymakers, we just ignore it. Okay, we have been too focused on fighting the pandemic. So we have actually misused the policy. Okay, so it was a mistake that they have been doing expansionary policy rather than contractionary while the inflation was rising. So now it is the Fed that is raising the interest rate that is causing the stock market to go down. Okay, so now the thing is that when do you think this stock market will stop going down? Okay, so let's say this is a stock market, what is happening now? Okay, so this is March, and then April go down, right? So when do you think the stock market will stop going down? When? What do you think? Is it that the inflation, or is it the interest rate? What do you think? Is it the inflation figure, or is it the interest rate?
Pauline, can you please repeat your question?
Okay, when do you think the stock market will stop going down? Because now you see our stock market is going down, right? So when do you think the stock market will stop going down? When will you think that the US, I'm showing you, okay, let me show you the S&P 500. Okay. So this is the S&P 500, right? So when do you think it will stop going down? Now it is trying to hit this, and then in the end, after it hit, it will come down again.
Only
After we have,
we don't see your share screen.
oh, okay. Can see? Still cannot.
Can see.
Oh, okay. Unit say is interest rate. Okay. Yen say after we have the recession, the stock market will stop going down. And that recession is when we raise the interest rate. Okay, so the key factor is still the interest rate. Okay, and in the past, in 2008, it was the interest rate that caused the property market in the US to burst. Okay, the bubble burst, and then that result in a subprime crisis, and then the subprime crisis dragged along all the established financial institutions in the US, and that caused some confidence fear among the global financial sector. Okay, so I remember 2008 in Malaysia, we do not have any banks collapse. Okay, like what we saw in 2008 was that the US, United States, US has a series of default in the subprime banks as well as the major banks. Okay, so they are having problems in their banking system. But the rest of the world, in Malaysia, do we have any of these problem? No, we didn't. But how come our stock market also crashed like hell? Okay, in fact, our stock market crashed like 40 to 50% during that time. Why? And that was the confidence issue. Okay, so because of the global financial crisis, and this caused a domino effect. Okay, so the whole world, all the banking system, they have this called liquidity crunch. For some of you who still remember, we call it the liquidity crunch, whereby they are all the banks around the world, they refuse to lend money to each other. Okay, because they're scared that if they were to lend out the money, then they have a liquidity problem. So then they withhold their money supply, and then they refuse to lend out. So then you have all this liquidity crunch, and then so our stock market also collapsed. Okay, the global stock market collapsed during the 2008. So we can see that sometimes there are many factors affecting the stock market. Sometimes it could be due to confidence, and sometimes it could be due to the interest rate, and sometimes it could be due to a natural disaster. So for example, in 1995, okay, I remember 1995, I was still in my university. So at that time, there was an earthquake in Japan. And that earthquake, it was quite a severe earthquake, whereby all the the buildings came down and things like that. So then because of this earthquake, global stock market also fell for at least like 1 or 2 weeks time. So you must be wondering, earthquake can also cause the stock market go down. And there was a time whereby the US had a tornado or something, okay, a typhoon, okay, tornado. So that was in 2005. Okay, I remember it was 2005. I forgot, Katrina or something. Okay, so that's the name of the typhoon. So that also caused the stock market to go down as well. Okay, so there are many factors that cause the stock market to go down, but sometimes the stock market crash, it could be a flash crash, meaning that it's just a temporary for 1 or 2 weeks, and then it will recover. For example, the 911. Okay, 911 in 2001, September 11. Can anybody guess how long did the stock market go down for US and also for Malaysia, or let's say Malaysia? How long did our stock market go down during the 911? Can anybody recall? Or you just make a guess? An event like this, something happened in the US, the World Trade Center collapse, terrorists, and then it will affect our stock market in Malaysia. So how long was it? Anybody guess? Just simply guess. A terrorist event like that. Okay, 3 months. David Chen say 3 months. Okay, who else? Lily say 2 years, and then Yan say 6 months. Okay, so I review the answer. The answer is 2 weeks, 2 to 3 weeks. Okay, so that was the time 2001. So you will have to understand sometimes is that when this thing happened, right? Is this a confidence or fear kind of a event, or is this a fundamental event? Okay, how can you tell whether it is a fear kind of an event or a fundamental event? A fear is when that you have a confidence issue, like you fear of this thing will happen to Malaysia, then the terrorist attack will happen to the rest of the world. It's like we will have a chaotic world, and that kind of a fear, but it haven't happened yet. Okay, you just have that fear, but then it haven't happened. Okay, so that is a fear. And then a fundamental event is when something it does happen. So for example, the pandemic, it does happen, all the shops are closed, and then we have a series of close down, all the SME, small SME, they close down, the shops close down, and then people out of job. So these are the fundamental problem. So however, when you see that there is a fundamental problem, then the stock market will be more on a prolonged basis, okay, whereby there are really people out of job, there are really recession, there are really business are closing down. Okay, so these are the fundamental, and this will cause the stock market to have a prolonged kind of a recession. So now we need to identify whether currently is this something like this, a recessionary kind of a stock market crash, or is it like a flash crash that is driven by news? What do you think? Are we heading for a recessionary crash, or is this a news-driven crash? What do you think? Just guess. Okay. Sometimes is this kind of analysis that it will help you to see the stock market better. Recessionary crash. So in order to confirm a recessionary crash for the next few quarters, right, we need to focus on the GDP data. Okay, we need to focus on the GDP data. We need to focus on the unemployment rate, because these figures will tell us whether our economy is having a recession or not. Okay, so if let's say the GDP growth rate is negative, okay, so usually where can we find all these figures? So I will go to the tradingeconomic.com, and here we'll be looking at the GDP figure here. Okay, so here GDP figure, if let's say we are looking at the quarter to quarter, they are all close to zero. That means that these countries are zero growth. Zero means zero growth. Okay, this is a GDP growth rate. And if you to look at the more countries, this is the quarter to quarter. You can see that across, Ireland is special, 10%. Okay, but other than Ireland, pretty much you see that it's zero, more closer to the zero. Okay, this is the exception. More are closer to zero. And Malaysia, this is 3.9, but maybe the next quarter we may not get such high already. Okay, so if you can see that the figures are getting towards a zero or negative, okay, then we are heading for a recession. Because during the pandemic 2020, okay, these figures all are in red. In red means that they are all negative. Okay, so that was a time whereby we are in the beginning of the pandemic. So all these are in red. So we were definitely in a recession during the pandemic. But however, because of the government intervention. How did the government intervention? They intervened by reducing the interest rate and then to increase the stimulus package. So when they do that, then you see the stock market had a V-shaped recovery, especially in the US. For Malaysia, we also had a V-shape, but then we have a prolonged kind of a horizontal trend. So that was because we did had a recession, okay, but that recession was a brief one because of the government keep on pumping in the money, right? So then reverse the recession. Now, are the governments going to pump in trillion and trillion or billions and billions? Are they going to pump in the money like before? Definitely not. Okay, definitely not. They're not going to drive another round of inflation, right? So they have learned the lesson. So what they will do is that they will let the economy recover by its own. Okay, that means less government intervention, and also the government also got no more money already. If you look at the budget, government budget deficit, so this government budget deficit across all the countries are huge negative. Anything more than 5% is considered huge negative. Negative 5% is considered huge negative. So we are all looking at all this very, very big figure here, big deficit. So meaning that the government also spent so much money for the last 2 years. So now with another round of a recession, basically they can't do much. They can't do much on the interest rate. They can't do much on the fiscal policy. So basically this fiscal and the monetary policy are handicapped. Okay, we can't move already. So then the economy will have to let it recover by itself, let it go. Okay, so meaning that we probably, okay, the recession probably will see a recession. Okay, maybe if the interest rate were to keep on raising. Okay, now let's talk about the inflation rate. Now, inflation rate, there are many types of inflation rate. So here, I'm showing you this. This is the US core inflation rate. So under the core inflation rate, do you see this figure, PCE price index? Okay, so what is PCE? Now, usually what we look at is the CPI core. Okay, CPI core inflation, it is this figure, which are looking at the core, the basic necessity, the core inflation. But however, there are people also look at the PCE. What does PCE stand for? Okay. PCE stand for Personal Consumption Expenditure Price Index. Okay, Personal Consumption Expenditure Price Index, whereby it excludes the food and the energy. So energy is excluded from this index. So meaning that if let's say you do not want to let the oil price to interfere with the inflation rate, you exclude this, and then this become the PCE. Okay, so let's take a look at the PCE price. So the PCE quarter to quarter growth. So this is the PCE quarter to quarter, whereby it is steadily rising. Okay, along with the core inflation, it is steadily rising. So what is the percentage? It is about 5%. Okay, without the oil, it's about 5%. So now the thing is that the Fed, okay, Jerome Powell, his target of bringing down the inflation is 2%. So this 2%, I think is the core inflation, okay, from 8.6% to 2%. So if that is the case, we still have some big room to move. I mean, there is still a big target to reach. So in order to reach such a low inflation, what do you think? You think it's possible? Because if I were to take away the oil component out, my inflation is still 5%. If I were to take away the oil component, my inflation is still 5%. So meaning that in order to drive down this core inflation to this 2%, I think is not possible, because the gap here, presumably the gap will be 3% of oil caused by the oil, because the core inflation is 8.6. Okay, and that 8.6 will include the crude oil. Now, if let's say without the oil, it's 5%. So meaning that the oil is about 3%. So now, if let's say the oil price is still remain $100 per barrel, okay, the war is still going on, the crude oil is still around $100 per barrel. So the inflation, the cost push inflation is here to stay. So no matter how high he raised the interest rate, okay, no matter how high he raised the interest rate at 10% or 20%, okay, the stock market crashed to zero, okay, the the inflation is still there, okay, because of the oil price. So but however, there's one good thing about having a like a global market kind of a stock market crash. Whenever you have a global stock market crash, commodities will crash together. So here we are looking at the oil price started to see below $100. Okay, so meaning that if the equity market were to go down, the commodities such as the oil price will go down together. Okay, so there is no any financial market is safe whenever there is a global financial crisis. When I look at the 2008, I see that as an example. The oil price actually crashed together with the equity market. Okay, so that was the time whereby we saw that the oil price, the bond market, the commodities market, and then the equity market all crashed together. And you can't find a safe place to put your money except money market fund. So if history were to repeat itself, we probably, okay, I would not say 100%, there's no guarantee in the investment world. There's nothing like guarantee, but then probably things will repeat itself, meaning that we may see that along with the equity market go down, the commodities will go down as well. Okay, so if you are looking for diversify into energy, I think you have to be careful not to overly optimistic about the oil price or the gold price. Okay, not to be overly optimistic about these commodities. Traditionally, maybe 10, 20 years ago, maybe these commodities are good diversification. Okay, that was what I see is that maybe 20 years ago, they are very good diversification, meaning the stock market go down and then all this will go up. It's like a inverse relationship. But since the last 2008 global financial crisis, I see that things have changed. Okay, because the investment environment always change, and then we just have to adapt to the changes in the investment environment. So what we saw in the 2008, it was maybe part of it is because of the internet and then the globalization. So everybody's watch news all over the website. So we are all influenced, or the sentiments are all influenced by the news in the website. So when the stock market crash, then other financial market all are crashing, okay, including the cryptocurrency. If you were to see the cryptocurrency now at this time, okay, so everything will go down together. So at least it happened in 2008, so it may happen now as well. So which means that what should we do? Okay, so at least we need to monitor this. We need to monitor the FOMC meeting. So the July one is 27 and 28. Usually it's on the 28th. They will let us know whether they will increase the interest rate, and then if yes, by how much. Okay, and then after July is September, November, December. Okay, so these are the calendar that we need to take note of, so that these are the dates that are possible to affect our stock market. Okay, so so regarding this economic data, any questions that you want to ask about the economic data? So there are two things that we need to monitor. Number one is the inflation. Okay, the US inflation rate, the core inflation rate. That's number one. and that will be on Wednesday. Okay, this Wednesday, that's tomorrow night. Okay, tomorrow night. They are all linked together. I wouldn't say which is more important, because the July 13 data is important. Why? Because the July 27, 28 FOMC decision will depends on the July 13th results. So they are all both very important. Okay, I cannot say which one is more important, but both are important, because of course, if let's say the inflation keep on rising, okay, and then if let's say the FOMC, they decided to hold the interest rate, okay, if let's say they decided, okay, so we stop raising the interest rate for this month, let's say they say like that, while the inflation keep on rising, so it may be also some good news to the stock market. The stock market will reverse, so meaning that the interest rate hike, the pace of the rate hike is reducing. So then the stock market will rally. Okay, so if you say which one is slightly more important, I would think that the July 28, the FOMC is more important, because whether they raise the interest rate or not, it lies in their hand. Okay, so they have the power to do that. So if they do not raise the interest rate, that's a good news. If they raise, by how much? Okay, if let's say they raise but by 0.25, it's also a good news. Okay, so if let's say they raise by 0.25, it's also a good news. So we have to anticipate how much they will raise interest rate. Okay, of course, tomorrow figure, everybody, all eyes will be on it. Okay, so that is why these 2 days you won't see our stock market go up too happily. It probably will have a small negative tonight, and then tomorrow will be the day. So before the announcement day, they will keep quiet first, or sideline, or they keep out of the situation, and then just to observe first. Okay. Okay. So let's talk about our chart. So if you were to look at our Malaysia chart, okay, let's take a look at KLCI first. So this is our KLCI. And if I have to zoom out a little bit so you can see there is a chart pattern here. Okay, so this chart pattern is from June 2020 to June 2022. So it's a 2-year chart pattern here. Okay, 2-year chart pattern. So meaning if you were to violate a 2-year chart pattern, when do you think this thing will over? Is it a short-term thing, or is it like a months? Is it weeks or months? Okay. Or years? Okay. So you can type in the chat, is it weeks? Is it months? Is it years? Okay, you can type these 3 answers in the chat. 2-year chart pattern. Okay, so see if you guys can remember how to project the duration. How to project the duration. Anybody? Given back to me already. What I taught you, given back to me. Okay, 12 months, right? Yeah, David, yes, very good. So we start from the earliest, I mean the recent height, which is April here. So 12 months from April, which is next year, April. You get what I mean? Next year. So that is the thing. Okay, so we are looking at not so fast. Okay, so this thing is not so fast. It will be it will take some time. Okay, unless what, of course sometimes there will be some miracle, some exception. Okay, so unless what happened, number one, the US Fed Jerome Powell decided not to raise the interest rate anymore. Okay, so that means he stopped right here, and then the next few 4 rounds of interest rate, FOMC, no rate hike. Okay, so that is one. Okay, number two, and any other things like local political news. I think the election, whether election or not election, is still down. Okay, whether if let's say tomorrow it says that, oh, no more election this year, next year, it will still down. Okay, because of the external the US stock market. But of course, if let's say the thing is that if let's say we have an election, early election this year, then what happened to the stock market? It will go down even further. You get me? So if let's say there's no election, it will not go down so much. Probably it will still down, but then it's like horizontal for like months, horizontal, just like this kind of a horizontal trend for months. You get what I mean? It will be long-term kind of a horizontal trend if there's no election this year. However, if there's an early election this year, then it will go down lower a little bit. Okay, not too much, but lower a little bit, but still higher than the bottom of this 2020, still higher than this one. So maybe around somewhere around there. Okay, so and also David say that Ukraine war ends. Okay, I've been thinking even if there is a Ukraine war end, the stock market will go up. Okay, like it will be a temporary kind of a rally. It will not be a prolonged kind of a permanent kind of a rally, because in the end, whether there is a permanent rally or temporary rally, it still depends on the US interest rate. So that's what I believe. So that means the US interest rate will be the number one criteria to decide whether the stock market will continue to go down or to go up or whatever. The Ukraine war is secondary. Okay, it will cause some short-term relief, stock market rally, but then in the end, the next month where it comes to FOMC meeting, people still have to face the interest rate hike. Then the stock market still have to go down. Unless the inflation rate start to come down, but it will take some time. It will not so soon. Okay, so which means that all these economic issues, challenges that we are facing, it's very challenging. Okay, this year is particularly very challenging. In the past years, we hardly have so many economic problems that come all together. So this year is like all together. It's the investment environment is not so friendly now. Okay, we have to admit that the investment environment is not as friendly as before. So this was the good old time whereby, if you invest in a unit trust, I remember some of my clients' portfolio, if you invest in a unit trust, 40%, 30%, 20% 1 year. Okay, so that was the time. Okay, but now all are negative now. Okay, all the portfolio are all negative. Okay, so that is the challenging time now. So meaning that if let's say you are looking for futures, okay, futures, and then you are looking for whether to long, to short, okay, I will still think that the short is still the main focus. Occasionally you can still long, like you want to do a spread or something, you can still long, but the thing is that it will still be on the downside pressure is still there. Okay, but of course this one we have to also refer to the US news as well. Okay, what is happening in the US will affect our Malaysian stock market sentiment. So which means that we cannot have a long-term position like what I did last time. Okay, we cannot have a long-term position, but more on the intraday trade or a few days trade. Okay, you just have to hold the position for a very short period of time, because every day is changing. If you notice, right, every single day is changing. One day bullish, the next day can be bearish, and then the next day bullish again. So it's is unpredictable. Okay, so now the investment environment is too unpredictable, so we cannot hold a longer position. We just have to cut short our position. Okay, if you just want to stay away, you stay away. Okay, so because it's too unpredictable, so if you want to stay away, you stay away first. Okay. Okay, so this one is looking at our KLCI, and then this is today, last, I think half an hour, right? Last half an hour or last 40 minutes like that. Okay, then the price keep on going higher. So it was a last minute thing. And but overall, if you look at the gainers and losers, we have is it here or another website whereby we can see? Let's see here. You see, it's a last 1 hour. Okay, last 1 hour, and it didn't say how many gainers and losers. So we have to go to Malaysia. Stop this. So you scroll down. And we click the market. Okay, so the gainers and losers should be here. We have 569 losers versus 292 gainers. So obviously we have more losers than gainers, which means that today is a bearish sentiment. Okay, it is a bearish sentiment. If you to look at the index, Bursa indices, so today they are only the banking sectors are in green, and the plantation sectors are in green. Healthcare sectors are in green. These three sectors are in green: financial, plantation, and the healthcare. So for the plantation, maybe they have oversold, right? So now it's like trying to rebound, but I would think that it's a temporary kind of a rebound. Okay, so in the end, the commodity price will still have to go down. So all these are temporary. And for the banking sector, because of the interest rate hike, right? So the banks, they will enjoy a higher margin. So interest margin. So that's why it will benefit the banks, but still it's like 0.07. Okay. So which are the sectors that are worst hit? The technology sectors, -3%. So meaning that technology sector is still not a good timing to buy in yet. Okay, still not a good timing. Okay. Okay, so now next we look at the regional market indices. Okay, so if let's say you want me to look at which stock or whatever, you can type in the chat. Huh?
Pauline,
So,
do you have any idea why Hang Seng and China down recently?
it's a global kind of down. And I think this is along with the regional market weakness. So if you were to look at the chart here, it is below that 20-day moving average. The trend line also crossed here, cross. So now is below this trend now. Okay, so which means that it is now looking at this neckline, a small neckline, like a 3 months kind of a chart pattern here. Okay, so So which means that there is a risk here. Okay, so this is the Hang Seng Index, and which I think is also because of their technology stocks are also going down. Okay, if you look at Tencent, Hong Kong. Okay, so here is the Tencent. So it has actually also come to this level. Okay, so we have to, whenever we see this, we have to draw a horizontal line, and then we can zoom out a little bit and then just to see. So every time when you see this, okay, every time when we see this, okay, we see this, we have to be careful. Okay, so meaning that we have to monitor this. And a few other tech stocks are like that as well. Okay, so I have to be careful. China stock down, China lockdown again. Yeah, they are saying that China, they are looking at the cases spike up again. So some of the area are locked down, but then this lockdown is not as bad as last time. This lockdown is more like a partially. It's not like last time whereby it was very strict. Okay, but another thing also came out in the news is that the Bank of China. Have you heard about the Bank of China? There were people trying to withdraw money but couldn't withdraw the money since April. Since April, they wanted to withdraw money. Can you imagine if you want to go to the bank? Let's say you want to go to Maybank and then you want to withdraw money. Since April, you want to withdraw money until now also cannot. Isn't it? You will be very mad and angry. Of course, they will go out to the street to protest. And then when they go out to the street to protest, what happened? And then all the white shirt.
Pauline, actually, it's not the Bank of China, no money. It's the those small bank.
Oh, is it the small bank?
Yes.
But I saw the news. It was Bank of China, 中国.
Yeah. Because of all these people, they went to this the Bank of China to protest. Actually, it's from the small bank. Okay. I actually the reason is all this is rich people, so they got a lot of money. So they put in the what they do is the head of the village, they form all the small bank. So they ask their village to keep the money inside all these bank.
Also, the bank is like a small banks like formed by the villagers.
Yes. Okay. Each of the village, they have their own bank, like Bank of Hennang, a bank of a lot of small banks.
Oh, I see.
Then they do some investment. Actually, they and so got a lot of reason why maybe
higher
the
interest
money
rate.
lost.
David say higher interest rate.
They also got give a higher interest rate, and the money they those village they put in, maybe the one of the boss inside the bank, or they use the money for others investment. Maybe the investment lost already, so they need to cover up. Then in the end cannot cover.
I
A lot of
see.
reason. That's why now the China government they try to pay back those what 7,000 USD. Each of those people can get back 7,000 USD. Now like the moment for those who got a lot of money inside, maybe million or billion, I don't know, a billion. So they want, maybe they cannot get because it's not under the government guarantee.
I see. Oh, okay. So it's a smaller bank, but then they went to the Bank of China in front there and then to protect.
At first, I also thought it's a Bank of China, no money, or whole bank. How come Beijing, Shanghai, no such, don't have this issue? Then it's a small bank because my wife, my wife is from China.
Oh, really? Oh.
So she told me all this story.
Oh, that's great. That's great. So we have an insider's story there. Yeah, so from the surface, we thought it was a big bang. Actually, it's not. It's just those smaller banks that formed by the local villages grouped together. And then so the head of that village, maybe they squander away the money, so then they cannot withdraw. Yeah, so sometimes that's human, the greed. Okay, because of a higher interest rate, you want to put into those higher interest rate instrument whereby the risks are higher. Okay, so okay, then also David says small banks, second tier banks have higher interest rate. And then Eunice say that's mean not real bank like previous time call what Hui. Yeah, Hui Ya. Yeah, I think so. It's like those Hui Ya in Hokkien. Okay, so yeah. So that's why all these negative news, you can see, because now we can see everything from the TV. So we saw that how the white shirt man to beat over the villagers and then become like very sensational and then say no human right and things like that. So all these are scandals and bad news, and it may affect the sentiment of the China and the Hong Kong stock market as well. But basically is the major trend. The major trend is still negative, the bearish sentiment. Okay, let's see Nikkei. So Nikkei 225. Did you saw the news that the Chinese actually celebrate? Okay, but anyway, so this one is looking at, now it's like a triangle pattern here. Okay, triangle pattern, and there is a neckline broken, and then now it's like hovering. So which means that it may break up or it may break down, or it's just hovering. So it is not too bearish, but then it's like hovering here. Okay, and see if it's above 20-day or not. Today slightly below 20-day. Slightly below. Okay, slightly below 20-day moving average. Okay, Shanghai composite. SSE. Here also below that 20-day moving average. So you see, this one is a very clear trend. The 20-day is a very clear trend. It's like this and break. Okay, so now it is short-term bearish, and the 200-day moving average is just around the corner here, waiting to break out, but rejected from that resistance. So this rejection means a lot. Okay, it means a lot. It means that you cannot break it, so you have to go down. So go down at least 1/3. Fibonacci retracement at least 1/3. Okay, which is around this level. So looking at this level, okay, at least it could be lower. Then Asian market we have covered. The next one is the Germany, DAX. So Germany, this one is a small double top, about 6 months kind of a double top. Okay, and cross down. Okay, after cross down, it rebounded a little bit, and now it is reversing from that resistance. You see, it's reversing from the resistance point there. Okay, reversing. So that means it's down. Okay, it's down unless tomorrow we see some good news. But anyway, today is likely to be down. So this is Germany, and then we see France. So zoom out a little bit so that you can see. So here we also see like a double top here and then break below. Of course, the bigger head and shoulder is here lah. From May 2021 to here. Okay, so this is a bigger head and shoulder. And it has crossed below this trend line and then below that 200-day moving average. And now it is on a downtrend with the smaller chart pattern is a chart pattern within a chart pattern. The bigger chart pattern is like this. Within the bigger chart pattern, you have a smaller chart pattern there. Okay, so now I'm looking at this small chart pattern here. Okay, so it is trying to struggle and then go above this neckline. Let's see if it can go above. Looks like it is above now. Okay, it is above. So France, not as bad. It is slightly above that 20-day moving average, trying to go have a breakout here. Okay, then FTSE 100 UK. What happened to UK? Actually, if you to look at the UK situation, do you think if you were Boris Johnson, would you resign? What do you think? If you are Boris Johnson, would you want to resign? All these are futures. Cash CFD. There is no index on this one. Index. If I'm just wondering if I'm Boris Johnson. Okay, first of all, what do you feel that Boris Johnson has a big mistake? What is his mistake? What do you think? Do you think he has committed like a big mistake or not? Or his is a small one? Anybody follow his news? Actually, what he did is that he just appoints somebody whose conduct is not so good. Okay, so and then everybody blame him because he has appointed somebody whose conduct is not so good. And he knew the person conduct and yet he appointed him. So everybody criticized him. So, but however, will that affect how he run the country? I think may not. Okay, so sometimes politics is like this. People want to get you down. There are plenty of reasons that they want to get you down. So immediately you see that after he resigned, right? So who are the people that want to fight over his seat? Those are the people who oppose him. Those are the ones who wants to fight over his seats. You see or not? It's like they will go for an excuse, okay, to pull you down. Okay, after they pull you down, then they also want to be the prime minister. Okay, so that is the situation here. But anyway, you look at that 200-day moving average is here, so it is below that 200-day moving average, and this double top is very clear also. We can zoom out and see if there is any major chart pattern that we didn't see or not. Okay, so this one is like horizontal and then crash and then horizontal again. Okay, so now we are looking at this part here. So this is a chart pattern here, whereby this is the trend line. Okay, and it is below this trend line. So meaning that it is in a correction mode. So this is in a correction mode. Okay, let's take a look at the US side now. US SPX, okay. Okay, so let me zoom in a little bit. So everybody see a very, very clear chart pattern here, right? It's a very, very clear head and shoulder. I don't think anybody can say that, oh, I didn't see this one, right? This is a very, very big head and shoulder. So now it is below this neckline, okay? And the target is here. So it is trying to regain. So let's see if it can remain at above 20-day, because currently it is still above the 20-day moving average. It's supposed to be short-term bullish, because as long as you are above that 20-day moving average, you are considered short-term bullish. So you are short-term bullish here. So I wouldn't be surprised if after tonight it will be a green figure here. Okay, so because as long as it is still short-term bullish, that means that people generally will not sell down so much. Okay, so that is the sentiment that is given out from this. So meaning that tonight it will not be a big sell-off lah, I think. Okay, unless, of course, there may be some exception, but I'm looking at it may not be a big sell-off, and then maybe you have maybe less than 1% of a negative here, less than 1%. Okay, so meaning that you will probably see that it is still above the 3,800 point in here. So this is the S&P, Nasdaq. Okay, so for Nasdaq, it is also above that 20-day moving average here. Okay, you see it is also above that 20-day moving average, and it is trying to break out, just like here. Okay, what you see here is very, very similar to what you see here. So it is trying to break out, and then whether it is successful or not, see whether the inflation rate is a hot data or not. Okay, so all eyes are for tomorrow inflation data. So we're going to see some interesting move around here. Okay, so what we see now, at least it's short-term bullish as well, and we are trying to see some here is the neckline. Okay, so this one, the neckline here. So if let's say this one failed, then you see that it will be resistance line. So where is the resistance line? Here is the resistance line, which is 12559. Okay, so the resistance will be here, but of course this will be the first resistance, and then followed by this one. Okay, all right, so let me pause the